What's up YouTube? I'm Brennan and I'm coming back to you with another video. So today's video is six stocks that you should invest in for dividends. So if we if we get right into Robinhood here for a second, I'll show you some of these stocks. So now that we're into Robinhood here, the first stock that I would recommend investing into dividends for. Now, I'm not a professional. Um, Kind of new to doing stocks, but I've been doing a lot of research and stuff like that. And these are my personal um, opinion on stocks that I'm investing in and that I think you should get into too. So I'll kind of go over why I'm doing it a little bit, kind of stuff that takes my eye, um, what the dividend rate is, all that good stuff. So let's get right into it. So now that we're into Robinhood here, the first stock that I would recommend investing into dividends for. Now, I'm not a professional, um, kind of new to doing stocks, but I've been doing a lot of research and stuff like that. And these are my personal um, opinion on stocks that I'm investing in and that I think you should get into too. So I'll kind of go over why I'm doing it a little bit, kind of stuff that takes my eye, what the dividend rate is, all that good stuff. So let's get right into it. So the first one I would recommend is AT&T. Um, AT&T is a relatively sorry about that. AT&T is a relatively cheap stock to own, which doesn't really matter, but it's going for $28.45 right now. So this stock um, is strictly basically a dividend stock. Now, if you look at the growth of this stock, it's gone down in the last 5 years, 11%. Last year, 23%. I mean, it's not a growth stock. Now, what a growth stock is, usually growth stocks don't have dividends, and this allows the company to grow faster by not having to pay out profits to the shareholders. So they can use those profits and invest them into not the country, the company, which lets it grow faster, generally speaking. So this company is not like you won't get growth this way, but you'll get dividends. And so if we take a look here, dividends on AT&T is 7.31%, which is really good, but it is kind of high. It's a high dividend, which is usually considered a little riskier. So AT&T is one of those, I don't think they're going anywhere for a while, and they have a really good track record with their dividends. They've raised them every year for the last, like, I can't remember, like 30 something years, something crazy. So they're good on that. They always have paid their dividends. The thing is with dividends, though, is a company can decide for whatever reason that they're not doing them anymore. They can raise them, they can lower them, kind of all at a moment's notice. Like, I've seen this dividend go up 3 times now since I bought it. It was at 7.09 when I bought it. Now it's up to 7.31. So, anyways, really good dividend stock. I would recommend adding some to your portfolio if you are looking for some dividend income and not looking for that high growth. Next up would be Coke. So Coke is kind of a long-term growth slash dividend stock. Now, if you see 24% in the past 5 years, that's almost 5% a year. So pretty good, not too bad. You like to aim for 8%, but that doesn't really happen all the time. So if you're collecting dividends on top of the 5%, that's pretty good. That's not bad. So they have a dividend rate of 3.31%. Really nice average dividend. I try to shoot for about 3 to 5% in my dividends range. Now, I don't really like too much lower. I do invest in some lower. I don't like too much lower just because you can get a lot of really great companies in the like 2.8 to like 4 range. There are a lot of really good companies where you can still get some of that growth, and so that just makes them a really good company. I don't like investing into any, like AT&T is 7, which is pretty high. It depends on the company, but it's higher risk. I mean, some of these real estate trusts I'll show you, they're like 14%, something crazy up there. That's just, I don't know how sustainable that is, and I'm not really sure how much money I really want to invest into that at this time, so I wouldn't recommend it too much. Put some in, but don't put majority in. Don't go crazy on it. So this is a really good stock. Coca Cola would be a good one to invest in for both long-term growth and some dividends. Next up, we have Johnson and Johnson. Now Johnson and Johnson is a, like, here, we'll read this down here for you. Johnson Johnson is a, they do like cleaning products, and they do research and development of different diseases, I believe, stuff like that. They're kind of like a health pharmaceutical type company, so definitely a need for them. They're not going anywhere anytime soon. They have a very long history, but they have a dividend of a 2.67%. Excuse me. Really good dividend rate considering. I believe this was the one. Yeah, look at that, 62% in the last 5 years. So, really great company to own. It's got high growth and decent dividends. I mean, 2.67 is not too bad. It's not crazy, but it's not bad, especially when you get that growth compounded on top of it. So, really great company to own as well is Johnson and Johnson. Getting to the fourth one here, let's get to it, would be 3M. 3M is also a very good company to own. They have 3.66% dividend yield, and they're up 14% in the past 5 years. So not super growth again, but you're gonna get nice stable returns generally, and a decent dividend to go with it. And when I invest in the stock, kind of my strategy that I've started out with is, if I can get some of those growth stocks, great. That's what I'm looking for. But also, if I have the dividends coming in, the dividends are just kind of like a bonus. Like, if I can get a stock that goes up at a decent percentage every year, generally speaking, in the past, but I also get them dividends on it, it's just kind of like little bonuses, little tips. Like, here's some dividends, here's some dividends, here's some dividends. And all that's doing is I'm putting it right back into that stock, which over the long term will grow your portfolio really fast. Well, not fast because it's long term, but really, you know what I'm saying. Just whatever. Anyways, moving on to the next one. I believe that was the fourth one. So we're at 4. The next one was this one right here, Realty Income, I believe. Let me check. Yes, Realty Income. Now, this one is a real estate driven company. So, I believe, let's see. Let's read this. Yeah, so they have rental income, and they operate in San Diego, California. They have 194 employees, and they have a market cap of 21.49 billion. So they're a pretty sizable company. Nothing crazy, but also they're not too small. Like, they know what they're doing, at least. They've been doing it for a while. So they have, I think this company, I believe, pays monthly dividends. So that's kind of a cool thing. Kind of count on money coming in every month. Now, it doesn't matter. You get paid the same amount because dividends are paid out for like the year at that percentage, and they're divided up into quarterly payments. So you still get paid the same amount, but it's just kind of cool to have it coming in monthly, I guess. Kind of like a nice, you can count on it coming in. I don't know. So this has a dividend of 4.52% though, which is really high considering compared to most. And they have a growth of 32% in the past 5 years. So again, moderate growth with a high dividend. This is a really good stock to own. I currently don't own any yet. I I put in like $200 a month or a week right now, and I just started like 3 weeks ago. So this is probably gonna be on my list for next week to buy. Probably Monday. This will be on my list. Might put a little bit in tomorrow. Haven't really decided yet. But this is definitely going to be in my portfolio soon. So I believe that was number 5. So number 6 is kind of like a bonus one. Um, this is kind of going to be one of the. Oh, did I already click that one? I did. kind of one of the crazy ones. So this one is new residential investment, and it's currently trading for $8.12. So really cheap stock, considering most stocks. The market cap is 3.38 billion. So they're a small company, very small company. But get a load at these dividends, 14.58%. Now, if that's not crazy, I don't know what is, because 14%, but if you look at the growth, they're down 41% in the past 5 years and 45% in the past year. Now, you like look at this graph. 16 bucks, 18. They're cut in half right now, which is a good buying opportunity. Stocks are down, good buying opportunity, but this is not going to be getting you any returns on your investment as far as what you put into it and the evaluation rising. This is just strictly going to be a dividend investment. Now, this is kind of a riskier for sure. I just don't know how long a company can can pay out those large dividend sums. I just don't know how that will go. So this is kind of one of those, if you want to put some risk and try something, I would go for it. So they only got 3 employees too, so they're cooking for 3 employees. That's probably why they're able to do such high dividends, is because they don't have employees to pay, stuff like that. So that kind of concludes all of my dividends. I hope this helps you out. Maybe if you're starting your portfolio and you're looking for some stocks to invest in for dividends, this is a first 5, maybe 6 if you want to go with that really crazy one there. But this will give you a few to kind of pick and choose from and get you a baseline moving forward. So thanks for watching, and if you haven't already, please subscribe and like this video if you enjoyed it. Keep looking out for new videos coming soon. I have a bunch of great ideas, and I'm still trying to post roughly every day this month to start the channel off right, and we'll see what goes with it, how it goes. So appreciate you watching. See you in the next one.